Bitcoin is the clear winner of the U.S. banking crisis. Moving on to a more positive note, the narratives around bank failure, stablecoins, and interest rate hikes seem strong enough to propel the price of Bitcoin, says CoinDesk's George Kalutis, something along those lines. Here's the deal. I was talking about this earlier with someone. The very interesting part about this is that stablecoins are failing too. What we saw as a part of the initial pump on Monday was really influenced by basically by Binance moving from BUSD to Bitcoin. And that is a trend that I am all for. What this trend is a removal of stablecoins, basically, into pairings back with Bitcoin. This means that you end up having a stronger altcoin market in the future. Because if we go back to Bitcoin pairings and Bitcoin goes up, well, a rising tide raises all ships. And the thing is Bitcoin is that rising tide and the altcoin market are those ships. We kind of had this weird position where, there's this potential or was this potential for stable coins tied to the US dollar to start marking altcoins separately. Now, a lot of people that support the altcoin markets, etc., I think initially thought that this was a good idea. There was like this idea of decoupling from Bitcoin that would be prosperous for Ethereum and so on. But I don't think that's true. I think decoupling from Bitcoin is actually a detriment to the altcoin market because of this effect of the tide rising all ships. So now that we're going back to, basically we have a little bit of a kind of a 2 steps back in the cryptocurrency market here taking place, where the pairings are going to go back to Bitcoin primarily. And this actually ends up pushing forward the entire crypto market in general. Because if people are dumping out of banks and into Bitcoin, and all the altcoins are paired to Bitcoin and not to the US dollar, and the US dollar is overprinted and loses more value, and Bitcoin is, well, at its current rate, still printing the exact same amount with a reduction coming up in April of 2024, we're going to see a push up of the entire market as opposed to just Bitcoin. So this can be positive in my humble opinion. Silicon Valley Bank failed on March 10th, and since then, the price of Bitcoin has been on a tear. In the early hours of March 10th, Bitcoin was trading at around 19,600. It whipsawed just above and below 20,000 until around 12 p.m. Eastern, when it was announced that SVB was going into FDIC receivership. At that point, Bitcoin shed $200 to dip below 20,000, jumped around a bit, and spent most of the weekend trading above 20,000. Everybody was kind of waiting to see what was going to happen. By Monday, March 13th, at 9:30 Eastern time, it was trading at 22,386. This was primarily a reaction from the Asian markets reacting to the emergency meeting in the US, which is actually really interesting because, like I said earlier, a lot of the jump later on where we started to see, I think it was on Tuesday, that pump up to like 26,000 was influenced by the Binance shift, I think, heavily from BUSD into Bitcoin. That being said, that was not an indicator that influenced Asian markets to pump the price up by 20% overnight. So we're seeing kind of this combination of effects where there is a lack of trust in the US banking system, which is interpreting into, I think, a lack of trust in foreign markets for the US dollar, which then propped up the price of Bitcoin, right? As a haven, which is like what we've been saying it was created for. So are we seeing Bitcoin really come in to fulfill its proverbial prophecy is really the question. And maybe it is. Just 24 hours later, Bitcoin was trading at 26,175, at one point even touching against 26,500. As of publication, or as of this video, it's trading at $27,397. Says that I've maintained here and probably elsewhere that narrative matters a lot when it comes to the price of assets. If you don't believe me, you could ask Federal Reserve Chair Jerome Powell, who said that, quote, people's expectations of inflation have a real effect on inflation. Jerome Powell has some of the best quotes, like, we don't really know what's going on here. That's my favorite one. So what happened to the narrative to lead to this type of aggressive 35% trough to peak change? It's simple, really. A lot happened. Given Bitcoin's history, the bank failure adjacency is obvious here. At least 3 banks have failed. Others, both American and non-American, are failing. We also have Credit Suisse, by the way, a big one. Because it's not because of Bitcoin, that's good for Bitcoin's price. Actually, it isn't clear who is at fault for the 3 bank failures, because who even knows if these banks are failing due to insolvency? And this is really a problem with the Signature Bank one, I think, that's being called into question in New York, primarily because it was one of the largest banks that had basically crypto services, and it was also in New York. In addition to that, last week we talked about the proposal for the 30% crypto mining tax from the Biden administration. Politically, you can choose either side if you want, but it's clear that the current administration is not in favor of Bitcoin. Trump administration was not either, if you recall. So pay attention to that, because there are proponents for Bitcoin within the federal government. Within local governments, they're a lot stronger. Like in Texas, Ted Cruz, for example, is a big supporter and proponent of Bitcoin. There are, lots across the nation. Check your local too, because one of the things that I keep talking about, and I want to really hammer this home for everybody. If you're a U.S. citizen, it's important to understand that this is becoming a states' rights issue very quickly. This is akin to marijuana legalization. This is akin to the Second Amendment. This is akin to all of those types of issues, which means that if you are a proponent of Bitcoin, you need to pay attention to your state's regulations and decide if that is, a state that you want to stay in. You could try to vote with your vote if you want, or you could just vote with your presence and your tax dollars and move to another location. That's another thing. And you should be looking at and planning that ahead now, because it's coming, right? And initially, I think what you're going to see is a little bit of the federal government overreach once again, probably akin to the overreach during the cypherpunk days, the early cypherpunk days in the 90s, when they shut down, Stephen Jackson Games, that sort of thing, for participating in encrypted email. There will be some examples, right? Texas, had its protections for Stephen Jackson Games. It didn't matter. There was federal overreach, and that will happen again. There's going to be some people that they make examples out of at this time. And then I think eventually it becomes so ubiquitous, like, for example, the marijuana issue, to where they're just kind of forced to give up, because if everybody adopts it, you can't put everybody in jail, right? You can't make examples of everybody. You can make examples of a few and try to scare the public, but do not fold to fear in this. This is a lot more about the future for your children, in my humble opinion, than it is necessarily just about in future generations, right? This is for posterity. This is for our livelihoods. This is not just about Bitcoin number go up, because it doesn't matter how high Bitcoin goes up in terms of the US dollar if the US dollar isn't worth anything. Okay. That's just fact. Sure, SVB failed to do an old-fashioned bank run that was spurred on due to apparent weakness, or to an old-fashioned bank run due to its apparent weakness on its balance sheet because of poor duration risk management. And yes, Silvergate was running into some issues. It had to take an FHLB loan. Excuse me. I shouldn't have drank a soda. But its eventual winding down was reportedly voluntary. And then we have Signature Bank, where even the regulators can't figure out if the bank was shut down because of crypto or because of a crisis of confidence in leadership. Quotes, that's really important, because I'll tell you, it was probably because of crypto. This isn't dissimilar from restricting access to the US dollar from banks in Venezuela or banks in Argentina. This isn't any different than that. It's just Now we're talking about restriction of banks in the US from cryptocurrency. This is really kind of an interesting comparison that we can make, because the good news is that we've seen this before. So we can start to make those correlations and start to really draw out that conspiracy theory map to make, I think, what you could say beyond a reasonable doubt that this is definitely a possibility for the future that we're moving into.
Established in 2017, Octominer is an international mining hardware company. They manufacture and engineer the best mining equipment in the industry and supply rigs to some of the largest mining farms around the world. Their GPU mining rigs also integrate with the top crypto operating systems like HiveOS, MinerStat, and Simple Mining. All parts come with an international 1-year warranty. Exciting news! They will be adding ASIC miners for sale to their website soon and launching a new product built specifically for ASIC home miners. Please visit octominer.com or email support@octominer.com for questions.
Let's all add on the fact that there are wider risks of the broader banking system. Credit Suisse just received a 50 billion Swiss franc loan from the Swiss Central Bank, and 11 banks just injected $30 billion into California-based regional bank First Republic Bank in order to save it. On the former, it is telling that the central bank wants to save Credit Suisse, or Suisse. I don't know. Either way. On the latter, it's even more telling that banks want to save a competitor for fear of contagion. Otherwise, why wouldn't they just let a competitor fail? Well, my friends, there is contagion, but there's also the fact that I think internally, these companies have been aware of FedNow payment system for quite some time. They have probably had federal agents and representatives trying to sell them on it. And they probably see the writing on the wall of the removal of the need for their services for a great majority of the inflow and outflow from the federal government to the American people, right? This is a big deal. That all said, we know one thing that isn't causing these banks to fail. These banks aren't in trouble because of bets on Bitcoin, crypto, or the companies in those industries. Well, maybe not for the failure, but for the shuttering of Signature, it's definitely a question. Your relationship or participation within crypto could definitely put you under more scrutiny from the federal government at this time. What appears to be happening is the fractional reserves banking system is under stress due to rising interest rates, and it's showing cracks. And so the narrative goes, as the banks fail, opt out and buy Bitcoin. That narrative is strong enough to propel the price. And get this, boys, we're propelling the price in what would typically be the pit of the bear, right? We're not expecting from the traditional Bitcoin halving cycle to see a pump in the price for at least another year. And really, if we look at price history, it's not till 6 months to a year after the halving. So we're really not looking at a pump in price until a Bitcoin from the traditional halving cycle for another year and a half to 2 years. So we're seeing a pump in price over the average price to mint a Bitcoin by quite a lot. We've gone from the 23,000 now to 27,000, which does mean probably this halving cycle is going to be absolutely fire. It's going to be insane if this continues. With the failure of Signature Bank, we saw the US dollar stablecoin USDC lose its dollar peg last weekend. USDC regained its peg during the week, but the loss of the peg rightly spooked a lot of people. To USDC's credit, it is worth considering how rapid its recovery back to $1 was. That said, its depeg did highlight that USDC is not immune from counterparty risk, as some may have erroneously thought. So if we establish that both USDC and the dollars in a bank account have counterparty risk, you might ask yourself, is there anything without counterparty risk? And the article goes on to say, well, yes, there's Bitcoin. So this is really what we're talking about. I said at the beginning, we're moving away from Bitcoin equals $27,000 to one Bitcoin equals one Bitcoin. And this is how I will interpret my holdings of cryptocurrency, I think, from here on out, going in my own head as I start to analyze the markets outside of paying for power, right? Pretty much how I look at it. Unless we can start cutting purchase power agreements as well with Bitcoin, which, you know, in power co-ops could be a thing. A related stablecoin story also came into play with the world's largest crypto exchange by trading volume, Binance converting $1 billion of US dollar stablecoin Binance USD to Bitcoin. That was a lot. I told you guys, that was a big pump. Ether and other cryptocurrencies in the early hours of March 13th. The conversion came as a result of Binance rival crypto exchange Coinbase officially shuttering BUSD trading on its platform due to liquidity concerns. Well, that's an interesting one too, because they're a competitor, right? So, but Binance still making the decision to do that is interesting as well. Binance's sale not only added to the buying pressure, but also could have potentially led to a follow the leader effect in which the people also exchanged their BUSD for Bitcoin. It looks like we might have a suspension of interest rate hikes from the US Federal Reserve, which could give the entire market a well-needed breather, especially as some view the failure of these banks as being closely tied to the raising of rates by multiple of almost 20 over the last year. On Wednesday, the CME Fed tool, a predictor of interest rate decisions, forecast a 45% chance of a 0 basis point rate hike. It's now predicting an 80.5% chance of a 25 basis point increase. Both numbers contrast sharply from last week when the CME showed 68% chance of a 50 BPS rate boost. Of course, that's just the market hopping on the narrative that the rate hike might not be as high as previously expected. There has been no indication from the Fed that this will be the case. There goes that narrative and expectation again. So lastly, I keep saying Bitcoin, but don't I mean crypto? And he says, no, I don't mean crypto, I mean Bitcoin. Amid all the market turbulence, Bitcoin's price is going up faster than even the much smaller and often more volatile altcoins. But this is really standard. So there's two things. I disagree with him here, okay? And the reason why I disagree with him is that this is pretty standard. One is that you see Bitcoin go up first and then you see altcoins follow. Two, we're moving away from the decoupling of cryptocurrencies from the stable coins and back into the coupling of alt currencies with Bitcoin, meaning that this will actually probably be one of the best altcoin markets as well, because once you start to see that outflow of Bitcoin into alternative currencies or altcoins, you will see a pump in price, right? Because we're going back to that a rising tide rises all ships. And then once you see that pump, then you'll start to see the FOMO into the altcoin market, right? So if you see, for example, we can take any of them, Caspa or Ravencoin or whatever, you see that outflow from Bitcoin into Caspa, let's just say, and then you get this retail interest that all of a sudden is like, why is this coin pumping? And then you get this kind of FOMO in from retail without even understanding the currency. It could even be Shiba Inu or whatever, right? Shiba Inu has some other issues going on, but for example, it could be literally anything, just because these people aren't paying attention to what's actually a good currency and not. They're just paying attention to whatever the chart says. So because of these two things, though, this isn't any different from any other cycle between Bitcoin and altcoins, and this isn't, and we're moving back away from stable coins and going more towards a coupling with Bitcoin. I see it being, I see altcoins definitely playing a huge part here. So in all, there's systemic global bank risk. Stablecoins and crypto proved they need those banks to be stable. And amid all the general angst, the Federal Reserve may be pulling back on rate hikes. All that has added up to Bitcoin swinging up massively over the last week. That it continues is anybody's guess. To be sure, uncertainty is never cause for celebration because of its potential negative consequences on people's lives. But for the time being, Bitcoin with its fixed issuance at the time of monetary expansion, looks like a way to opt out of this most recent crisis. Maybe it is. And here's the thing. This is what we've all been expecting from Bitcoin, because this is the reason it was originally created after the 2008 financial crisis. Pain has to be felt for Bitcoin to be adopted in this manner. And I know that's very uncomfortable, because there is this cause for celebration for something new, a new way forward, this new monetary system where we could move into cryptocurrency or Bitcoin, and we could opt out from federal governments and banks. However, there's no way that that actually happens without some sort of pain and negative impact. Because if the system is working perfectly, there's no reason to change it. So the system has to prove that it doesn't work for people to change. And with the system proving that it doesn't work, there will be a lot of upheaval. That's just the way it is. So when people talk about Bitcoin, and it's kind of like, in the past, it's been that tie to the US dollar, and there's kind of this hype surrounding it. And, oh, this is the new payment system. And, well, you know, if everybody's doing well and they're utilizing the US dollar and that seems to be working, there's no need to move to anything else. So this is inevitable. It's inevitable that for Bitcoin to actually be ubiquitous, the rest of the system has to fail. And for the rest of the system to fail, things can't be going good, right? The entire point of Bitcoin was to help protect the individuals that participate within it from an economic crisis. Will that actually prove out to be true in this particular case right now? Maybe, maybe not, but it sure is looking like it's showing signals of being that haven. And a lot of people are adopting that idea. And the narrative there is important. He does talk about that narrative being important. That narrative is important because the narrative of Bitcoin from the very get-go was to protect from this exact situation. And then this situation happens. And then people actually see Bitcoin starting to show signs of actually holding true to that narrative. That could cause an absolute insane parabolic move and shift into a completely new economic system. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.